Much success can be attributed to inactivity. Most investors cannot resist the temptation to constantly buy and sell. Warren Buffett. The same normal. About a month and a half ago, we have said that overbought, oversold indicators have been working very well. Nothing has changed. We have gone 5 from 5 on YouTube from buying and selling just using overbought and oversold indicators. These indicators will never always just work, but at this period of time, it seems like it is the best. And we've been kind of quiet, but only 5 moves in the last month, but those 5 moves have been very profitable, and we want to continue the same way. About a year ago, it was always to buy on the dip. About 2 years ago, it was always to short into the market. Now, what to do, at least in the last month and a half, it is to use overbought, oversold indicators to buy or sell short the market. We're in a position right now where we're seeing a lot of oversold securities, stocks, and indexes. Thus, we're giving the impression that we are going to go on the limb and saying in the next day and a half, or when the market goes just a little bit lower, that we are going long this market short term. Before we get started, disclaimer of what I said. The information provided on our channel is for education and informational purposes only and is not intended to be a substitute for professional financial advice. Protect your capital by all means. This channel is about building a system. This channel is about you learning how to trade and to invest based off certain formulas, certain historical, financial, technical, or whatever indicators that you use. This is not a channel, is a get-rich channel where we say, just listen to us. You must put your time and effort in building your system, and that's our disclaimer. We have been very correct in the last 2 years, and we hope to continue the process, but we deal on probabilities. And right now, for the short term, we've been 5 for 5. So every time that we make a decision, the probability runs a little bit against us that we may not be right. But at the levels that we're going to go over today, if we have 1.5, 2 more days of sell-off, I think that will be the tops. We're very concerned for the intermediate term and maybe the longer term, or concerned is not the real question. It's more, we want to see what happens because one of our indicators are showing very poor signs and is not improving at all. So as you know, we are a top-down approach. We look at the big picture and break it down. We have a trading edge with our indicators. A lot of them historical, a lot of them analytical, a lot of them just using information of what's out there to give us actions. But what we're really trying to achieve is high probability investing. And it goes back to our quote, we really waited. We have not been posting a lot of videos, but when we post a video, it really makes a difference because we don't have the temptation to always trade. This was very different all year round, where all the time we were just buying on the dips and never shorting into the market. This has specifically changed. We have a 3-part process: overall market, sector, phase, and individual securities, which today we'll be going over the overall market, and during the week we give you individual securities. So we have officially changed our overall market into a bullish stance. We are leaving our intermediate term neutral and optimistically hoping that the presidential cycle will continue, and our long term for capital gains, we are bullish. We're going to consider multiple sources of evidence today. We're going to be adhering to a defined plan and using analytics, data-driven insights, and technical analysis. We have a set of rules that guide you to make a decision-making process. We are following a disciplined approach, and we want to increase the probability of achieving. But more importantly, we are consistent. If you go back 2 years, 3 years, we're going now on YouTube, we have been consistent on our approach. I have been consistent with my approach for the last 10 or 15 years. Now, this is my approach. There are other approaches out there. There's day trading approaches. There's fundamental approaches. But we focus on 3 different levels: short-term, intermediate term, and long-term. Let's go over a little bit of news. Big tech earnings will consume investor attentions this week ahead. Microsoft, Alphabet, Meta, and Amazon are slated to report, while Coca-Cola and Exxon will also highlight a busy week for corporate reports. On the economic front, investors will closely watch Thursday's release of the first estimate of third quarter GDP, which is expected to show U.S. economy grew at an annualized rate of 4.3%, Friday will provide another look at the Fed's preferred inflation gauge. The big tech reports come at a critical time for the market's 16-year highs on Treasury yields and uncertainty around when the Fed will reach the peak of its interest rate hike cycle have weighed on stocks over the past month. Last week, the Nasdaq fell more than 3%, while the benchmark S&P 500 dropped more than 2%, and the Dow industry slipped more than 1.6%. The most concerning fact that we have right now is the phases, stage analysis, where S&P 500 companies are 88% in negative in a distribution declining phase, and Nasdaq is at 83%. This is very disheartening to see that it's very difficult to pick a winner in this market. Sectors are even worse. So when we're telling you short term to go bullish, we don't know how much it will go up, but we don't expect it to go up huge. Of course, if there's capitulation, we'll be looking at. What is capitulation? Capitulation is that if today we go lower in the morning, then reverse at the end of the day, followed by another higher day. And this is what we're truly looking for this week. But as a YouTuber, I need to give you what we're going to do. So to go on the limb, short term, we are going long the market and shorting the VIX. For our long term, we're looking at the QQQs at 345 to a 50 area. Let's continue further. The VIX and the VXN at certain levels right now are bullish. There is a lot of fear in the market, but you must forget about what you feel and look at what you believe in. And historical data says that these numbers, VIX and VXN, at the levels we are right now, are bullish. Just look at it on a 50-day moving average. Now you can say back in April, there was more fear. But at what we are right now, there is a lot of fear. And if we can get this number a little bit higher on capitulation, even better. We are looking, as we told you, for singles. We're not investing a lot of money where we're just trying a few singles to drive a runner home. At the beginning of the year, we were telling you to buy into the market with full force and looking for home run. But now we're looking a lot for signals. We're going to come back to the short term, but you can also see the real VIX contract is up at these levels, and a proprietary indicator will hit 100 soon. But let's continue further. Our short-term overbought, oversold indicators, 0, 0, 0, 0, 0. We are oversold in this market. Now, could it go lower? And I've seen times where this number 0 has stayed for an anomaly amount of time, which is 8 days, but usually it'll pop. So 1 or 2 days more at the 0 level, and then it will pop. Now, how much it pops is another level. As we gave you on Friday, the CCI indicator. The CCI indicator is an indicator used to track that may indicate buying or selling. It compares current price to the average price over a specific time period. We've given you a very detailed about the CCI since we added this indicator inside of our weekly videos. And this is at a bearish levels, which mostly we're looking at for the intermediate term. You see how this level turned down? Now, when this level hits the minus 200, that will further indicate a bearish sign inside of this market. But for right now, the CCI indicator is at bearish where it could go lower. Now, we are using a weight of evidence, and the weight of evidence tells us short-term bullish. But we would love the CCI indicator to go reach extreme levels of oversold and then to bounce off the bottom. But remember, we're using small positions, and we're also using short-term positions also, and we're not going overboard on it. And the reason why we're not going really overboard on the term and the intermediate term is because of the stage analysis and the sectors. It looks very poor, and it looks like it is not very positive sign for this market. Overbought, oversold indicators. Short-term, medium-term, and long-term are all singing bullish signs, as the probabilities that we're going up because these levels are at low is very high. Now, your emotions will tell you other things. Your emotion tell you we will go lower. I don't see this like 2022. I see this that we're going upwards and downwards. Just to show you our point, if you look at the number over here, 29%, we've been hovering from 28% to 33% on our long-term portfolio, and nothing has really changed much. Our components of the extreme levels of RSI is a very bullish sign of 14.11. Now, we could have came out with a video on Friday when the number was at 21, but we held steady for an extreme levels at 14.11. Same thing with the Magnificent 7, where it is right now a neutral period where some stocks look good, some stocks look bad, but mostly neutral. We would say it's mostly in a distribution phase. We go further. AAII market sentiment. It is a bearish number at 34.1. We look at the put-call ratio. Most people are buying puts. Most people who buy options are wrong. Another factor, RIDEX funds. Most people who are buying into the URSA funds are wrong. So thus leaving these levels at extreme levels, telling us to go at least short-term bullish. Stock price where the momentum of 52 weeks hitting size is at extreme fear. All this is lining up. So let's just give it a little bit weight of evidence first. Weight of evidence, stage analysis, bearish. Long-term portfolio of ours is going through a trading range. And for the last month and a half, it goes from 27% to 33%. Now we're at 29%. We go up a little bit, then we go down a little bit. And what helps us is overbought, oversold indicators. The VIX and the VXN, as you can see here, are at extreme fear, and people are very fearful of this market. Same thing with the contract itself. Oversold indicators are at 0 level. CCI is at a bearish level. Oversold indicators are at a bullish level. And specifically what has worked very well for us, the components at a bullish level. Magnificent 7 at a neutral level. AAI at a bearish level. Put call at a bullish level. RIDEX funds at a bullish level. Stock price strength at a bullish level. Let's continue further and go really on the limb here. Disclaimer. We are long, short-term, bullish buy on the QQQs, anywhere from pullbacks to 350 to 354. What we're going to be looking for, if there's capitulation where we fall much higher, much lower today, and then reverse towards the end of the day with another higher day, that's real capitulation for us, at least for the short term. But at the levels at 0, we may not get capitulation and we might just go from here. We are looking at the VIX, which moves much quicker and a higher percentage to contracts. We are strong bearish recommendation, which works opposite the market, crossing and closing above 19.99. When it crosses and closes below that, we are jumping into it, or rallies on a capitulation at 21 to 23. Let's continue further. We want to see if these levels can hold. And we look at the four indexes to see and go back to the left if those levels can hold today. And this is what we're specifically looking at from here. And we're looking at each of the charts, and we want it to hold at this level over here. Hold at these levels over here today. If it holds today and tomorrow these levels, we don't see an indication of capitulation and breaking through these levels. Either way, you're taking small moves for this market. If you like the information in this channel, please subscribe and like the video. You know the catchphrase. Study it, analyze it, adapt it. Peace.